17 years now, since 1999. Know the software very well. Worked with Len on developing many features. That's kind of an old picture of me a couple of years ago. I'm much better looking now. Let's go to this little disclaimer I got. Just says that this is an educational little webinar. It's not designed to give specific investment advice, not recommending specific trades. Don't know anything about your financial situation. So this is all for education. I just put together a little outline of what I wanted to look at. What I'm going to be looking at are all the features that are just built into the software, no matter what version you have, that you can use to help trade earnings. We also, as many of you probably know, have earnings plays, which is a specific module you can purchase as an extra that gives you specific trades. That is not what I'm going to be talking about today. This is all built just in the software. Everyone can use it. And I'll just start out by saying, of course, that earnings have always been a popular thing to trade, whether you're trading options or just buying and selling the stock, taking a position before a company announces earnings. Many times they miss. They don't meet what people are expecting. They do better than they're expected, and the stock moves dramatically. So the first place I wanted to start, I'll just share my screen here. And let's see. Where is my share screen? I wish you could find it. Oh, here, close the presentation. That's. I'll just open my desktop. And now hopefully you can all see my OptionVue screen here. I'm going to close this little window over here. I think that's annoying. So hopefully everyone can see that okay. Can't really see both my program and your comments in case you're going in the chat box. I'll make this a little smaller. Now hopefully you can see my screen here. And I'm going to start out with on the quotes display, you have various columns. And one of them that you can add is, I'll go to my main tab. Is earnings date. The earnings date lets you see when the earnings date's coming up. And to get that, all you need to do is you can insert a blank column. Oops, someone says my screen's not showing. Let me go back to desktop, sharing, full screen. It says I'm sharing my screen, so hopefully now you can see it okay. So what I did was I went in here in the quotes display and I hit insert on the keyboard after selecting one of these column headers and right click and you can choose earnings date. And then there's also other columns you can add. I thought I had some notes set up. Let me see what's in my notes column. And an earnings date, you'll see it's blank for all these. Up at the top here, I have mostly indexes and ETFs of various markets. They do not have earnings. So I'll go down, and now here's some stocks I have down here. Make it a little bigger. And you can see here's the earnings date. So for example, this first one, Universal Display, they're going to announce on 8/4/16 after the market close. Now that may be a little specific, but where we get our data and where everyone who's got the earnings dates coming up for companies, there's an actual estimated earnings date, and then there's when the company actually releases a news wire saying, here's when we're going to do our earnings. So for the most part, these are estimated earnings coming up. We'll know like 2 months ahead that usually each company will be announcing around a certain time. That may not necessarily be the exact date, but once you get closer, like within a couple weeks, then the company will actually announce, okay, we're going to announce earnings on this date and have a conference call. When that happens, the earnings will get updated. And let me go down here, see some earning candidates. One I wanted to point out here is Amazon. If you look over here, it says Amazon is going to come up on 7/21. Now, we have earnings seasons coming up, so I'll just add Alcoa. Alcoa is often considered the kickoff to each quarter's earnings seasons, like they're the first one that announces. And after Alcoa goes, there'll be a few more that week, and then it starts getting really busy. There'll be 2, 3, 4 weeks where there's just tons of companies all announcing earnings. So let's just open Alcoa for a second. It says they're going to announce in a 7-Eleven. So looking at my calendar, that's Monday. So the earnings week or earnings quarter is starting Monday. And just looking at these, here's July 9th. These are going to expire this week. Here's the next ones. These are July 16th expiring. These have an expiration date after they're going to announce earnings, which is July 11th, 5 days before. And you can see there's a very high implied volatility. We don't have an implied volatility here because it's so short. But you'll get that kind of a pattern. The expiration months before the earnings that are going to expire before earnings come out are going to have a lower IV, like normal. And then the ones just after the earnings are going to have a much higher IV. Let's look at one, like I'd mentioned, Amazon. Amazon is 7/21 is the estimated date. I actually went out on the news. They have not actually announced the date yet. They've not given an official notice of when their earnings are going to be. So let's look at these different expirations, the 9th, the 16th. Here's the 23rd. This is 2 days after they're supposed to announce earnings. And you see the implied volatility. I'll just look at the money calls, 25.9. Now go out to the next week, and it's 46.6. And you can see all these ones, 46, 42, 39, they're much higher than this one. That, to me, is an immediate indication that they are not going to be announcing earnings on 7/21. In fact, when I looked it up, about half the people have 7/21, the other half say 7/28. And so I'm going to assume it's going to be 7/28. So even though there is a date listed, they're not always exact. You should always go out and just double check the news. What I usually do is just go to the news, look at for an actual article that says, oh, conference call announced for earnings or whatever. So let me go and use Amazon here in this model. Look at the model volatility. And I already changed this date. They are going to announce 7/28 usually after the market close. So I changed this future date to 7/29. Can manually adjust it. Here is the horizontal skew, which is easier to see over here in the nice picture. And let me just clear that out. Here's what it looks like right now. And you can see how as you come up to the front months, it gets very high. And here's what it's going to look like as soon as they announce earnings. All that implied volatility there is going to go right out of the options. And we are projecting exactly how much in each month it's going to go down. Let me just look at my thing here. So that's the estimated versus announced I was talking about. We talked about whether they do it before or after earnings or after market. There is nothing that tells you exactly when, but the importance of the after the market close. So Netflix here is doing it on 7/18 after the market close. That means when they announce the market's going to be closed, the first time the options would move or the stock would move based on the earnings report is when it opens the next day on 7/19. That's opposed to something like Delta Airlines. They're going to announce just before the market opens on 7/13. So on that same day, 7/13, is when the stock's going to move right away, first thing in the morning. It's not always the case, but many times it seems like some of the ones that open and they've announced it before the market open tend to be a little more erratic near the open. Maybe they've only had 20 or 30 minutes to go through the earnings report and get an idea of what it means. Where the ones who announced last night, people have had all night to kind of digest it and get an idea what's going on. So that's one of the importance of after the market close and before the market open. If you're going to play something, you're going to put, say, an option trade on just before earnings is announced in the hope it's going to move a lot, then you'd want to do it the day before 7/12 for a before market open. So at the end of the day, 2 o'clock, you could put a trade on 7/12, and when it opens the next morning, it's going to move based on the earnings report. On the after the market close, you want to put it on just before the close of the market that day, and then it will open up the next morning. Let me just look at Amazon, and I'll show you a little bit about what I mean. I just put a simple at-the-money straddle in the matrix by one of the at-the-money calls, one of the at-the-money puts. This is in July 30th. So it's just after I'm expecting them to announce in July 29. And when I hit Analyze, I have 5 lines. Here's what it looks like today, the top line. And then looking at there on 7/13, 19, and then here's this blue line that's highlighted, 7/29. That is right after earnings and the market opens. All that implied volatility goes out. And you can see the value of these options, because I'm long the options, drops dramatically from this day down to here. So what that means is you need the price of the stock to move a lot. And it shows you here on each side what the break-evens is. They are pricing the straddle at a 9% down move or a 9% up move. So in other words, if I place a trade, all these options are priced. And it's not just a straddle. All these options are priced by the market makers as if it's going to move at least 9% either way. And that means for me to make money, it's got to move more than 9%, like at least 10%. So you need a really big move on Amazon to get that. Now I'll show at the bottom, there are these little blue diamonds on both the up and down, and that's showing you where the options are basically being priced overall. So you always have that little thing showing down there when you're looking at earnings. And of course, you can always look at past earnings too to get an idea of how is it usually react. And the way to do that is open the price chart, and there's this blue triangle right here. If you click it, you'll see these blue triangles appear. That's showing when it announced earnings last. So you can see the last time closed at 602 and it opened at about 670. So it moved about 70 points. That was a little over 10%, about 11% move up last time. But you can see here, did not really move anywhere near as much. But you can see a lot of gaps every time there's earnings. You can go back. Now, one thing is with OptionVue, if you have BackTrader, you can go back and back test these. You can go back before each of these earnings, put on various trades, and start getting an idea of how things react as you walk through the earnings date, and you have this dramatic drop. And of course, if you superimpose the volatility chart, you have that corresponding dramatic drop in implied volatility each time. It'd be easier to get zoom in a little more, but you can see how here's the earnings, the blue line. IV shoots up before earnings, and then as soon as they announce, boom, it drops out. And that pattern is repeated over and over every quarter. And that's what you're trying to do. You can play earnings one of two ways. You can try to play the volatility ramp up, which happens going up to earnings announcement, or you can try to play the big dramatic, what they call a vol crush, right as soon as they announce. And you can also just play the price move. That's easier to do with a stock and synthetic. And of course, if you're doing a long call or long put, even if you guess the direction right, the price of your option is going to be crushed from the vol crush. So you need a very big move to make up for going into. It's not even a headwind. It's more like you're walking into a tidal wave at the beach. Chances are it's going to be hard to go forward. Let's see. So gone through all that and looked at the matrix. I was going to mention too, I mentioned the diamonds and triangles. But OptionVue, when we have that date in there, and every one of these that has a date for earnings, it's going to bring it in automatically. Here's another one. July 13th is Intel. So that's coming up next week. So coming up, and when we look at this model, you always see it brings in this future event date, and then it's showing you here how it's going to, when it hits this date, how it's going to adjust the options. You can see not big amounts here. You can always click this to get rid of it. And you see the actual, how it looks now. Notice this front one isn't even impacted by the earnings. And then here's this little flatten the line. And this is what it's going to look like as soon as they do announce earnings. But let's look at one with a little more options about Netflix. Netflix is always a popular one. And looking back at the price chart, you can see it tends to gap quite a bit. And of course, there's plenty of news right now coming out on Netflix. People aren't sure how they're going to do with increasing their prices, other subscribers dropping. So when we look at it, I again put an at the money straddle in here and hit analyze. And again, you can see this vol crush, boom, all of a sudden down to here. This date is 7/19. That's when, let me just go back. They're actually, after the market closed on 7/18 is when they're announcing. So 7/19, when it opens, that's when the stock's going to move based on that. But rather than do a straddle, you can just bring in Trade Finder. and bring it in there. And if you choose the bell curve is just going to give you like a 2 standard deviation move around the current price. So we bring in the current price. Now we can bring in the future volatility by just pasting in the current one. And when we paste in this date, because it has earnings, it put in the earnings date or the day after earnings that's going to be affected. And then the second button becomes available here, and I can choose to get the modeled volatility. And you can see it's already saying it's going to drop 28%. I can choose whatever strategies I want, how much money, and I'll just hit go, and I'll just start running through trades. And I just want to make sure you know that OptionVue is doing a couple of things with the horizontal skew. It is taking into account that day by day, volatility is going to keep going up a little bit, all the way up to when they announce earnings. And then, boom, it's going to drop it. So it models that whole procedure every single day. And that's taken into account in Trade Finder automatically when you're looking for trades. You can see it's coming up with quite a few trades and going through. But that wasn't the main thing I wanted to show. I just wanted to make sure you knew you could use Trade Finder and it will work great with it. I'm already getting low on time, but I think I've gone through the main things that are in here. The last thing I was going to show you is we actually, you might say, how do I know what stocks have earnings coming up? And we do have, if you click up here in the upper right, the red E, it's the earnings search. If you click on it, you'll see you have earnings search. And it brings up this little box, and you can choose list companies announcing in the next 1 to 5 days. I'll say 5 days, 5 business days. You can say what day you want to start. Maybe I want to start on 7-11, which is when Alcoa is going, like what's going to be next week. And you can see all these being highlighted are the ones that are optionable. Let me uncheck this. At the bottom you have some options to choose from. One is select only option stock. So these other stocks in here, it has the dates, but they don't have options. So now I'm only selecting the ones with options. And I got 68 of them. I can exclude stocks that are priced less than $10. That brings it down to 57. But I don't think I would do that because some stocks do trade enough, even though they're low priced. And Alcoa is just under $10. It's a $9 and something stock. So you'd even get rid of Alcoa by doing that. And one thing is, but you could change it to something else like $5. And then you can exclude stocks with the DVO less than, and you choose a number. DVO is the dollar volume of options traded, and that's the amount of options traded each day. So that 50 means it trades at least $50,000 in options a day. Notice if I have it unchecked, I have 63 stocks. 50 is pretty low. If I check that, down to 21. So 40 of these are very low liquidity stocks. So I'm just going to add it, right click on a highlighted area and say add the quotes display earnings search results. And you'll see here at the bottom it automatically created a new group, earnings search results, has all these stocks. Now I can sort these and look at them. One thing is this earnings date field, you can right click and sort by. So now I can see the order. So on Tuesday, Fastenal, next day, Wednesday, Delta, CXX, quite a few on 7/13, 7/14, 7/15, and then going into Monday the next week. And there's a lot of big ones. You could sort by something else, like I don't have it on here. You have the ability to show the DVO on your quotes display, the dollar volume options traded. And then if I right-click on the top of that one, now the most liquid option markets come up to the top. Bank of America, JP Morgan, Citigroup. 3 bank stocks. They're not in the best shape, I guess. People worried about Brexit. And then as you go down each of these, the lowest one though is this First Horizon, another bank, MT Bank. But because I cut it off at 50, they're still trading 60, 70,000 a day in options. Let me just go back and see if I happen to have any questions here. I don't see any. I think I went through pretty quick, but I was trying to keep it under half an hour. Let me just look here. Made it through pretty much everything. So you can see that earnings announcements, it's an exciting way to trade. Everything happens often in a day. A common thing is put on a trade around 1, 2 in the afternoon the day before they announce earnings. And then boom, next morning at the open, you pretty much got a good idea what's going to happen here. Now, a lot of them, you know, it can be tricky on when to get out. If you have a profit, it's like sometimes it might pull back a little. The majority seem to usually be if you're in a non-directional trade or a straddle and it's moved one way, they tend to do better if you wait till later, like 2 in the afternoon to close them. Hold them like the whole day. But sometimes, of course, you just see you have a big profit and you just can't help but take it. I'll just mention then, we do have the earnings, we do have that earnings plays module, which is $2,000 a year. That comes out with different kinds of trades. We call them E-primes, where they move a lot. So I chose a couple of them. One is Netflix. That's coming up on 7/18 after the market close. So that's one where on 7/18, about 2 o'clock, you should put a straddle on. And then hopefully the next day it's moved a lot. And to give you an idea, if you did that the last 2 years, the last 8 quarters, you would have won 5 out of 8 times. Delta Airlines, it's coming up. Delta is actually the opposite, that the options tend to be expensive for how much it actually moves. So you're better off on that one. They're doing it before the market open on 7/13. So the day before 7/12, you'd want to buy like a calendar. Or you could do a naked straddle or strangle, but a lot of people either don't want to or can't do that. So you could do a calendar. And the idea is that the options are expensive. They're priced at more than what it's going to move. So that's why you do a calendar as opposed to a straddle. Another interesting one coming up is Intel. And actually, Intel is going to announce on 7/13. But the interesting thing about this one is when Intel announces, Microsoft also tends to move along with it. And it's not priced to Microsoft options. So the idea of this one would be to put a straddle on 7/12 on Microsoft and wait for Intel to announce. That one would have been a winner 5 out of the last 8 times. But I will say out of these ones, 5 out of 8, 6 out of 8, the winners are usually a lot bigger than the losers. You can make a lot more on the upside, but when you're losing, you're usually losing like 50%. Another one coming up is eBay. eBay and Amazon. And this one is what we call an echo, that eBay tends to do the same thing. So eBay on 7:20 after the market close, then they're going to announce it's going to move on 7:21. If it moves up or down at least 3%, then you should just buy a call or a put in Amazon to run the same way the rest of the day. So if eBay opens up 3%, you buy a call on Amazon, and Amazon should be rising through the day. That might be a little tricky because Amazon's going to announce that same day, 7:21 after the market closed, but that's how an echo works. And the last one is I have here is Adaptech. Adaptech is announcing on 7:18 before the market opens, and you wait for them to announce on 7:18, and when it opens, whether it opens up or down, you just jump on in that direction. If it opens up, you buy a call and let it run the rest of the day and just get out by the end of the day. So there's many different ways to trade earnings. But you can see in OptionVue, we not only have many tools, the earnings search. Let me go back to the earnings search, the earnings dates coming in automatically, the modeling that I know no other option platform has. I think that gives you a lot of the tools you need to really trade earnings properly. Let's see. Say thanks for coming. I'll just check to see if I have any. I see someone asked about what option strategy I use for earnings, and I just went through a whole bunch, so hopefully that answered Stephen's question. I was just going to mention that we're all over the social media. Got Facebook, Twitter, Google+, YouTube. I don't know if here's our Facebook page. You can see that we actually post quite a bit. This is just like the last 2 weeks. There's been at least 3 or 4 webinars, a couple other videos that we've posted. I don't know if you saw Yates Danger Indicator by Len Yates. We also post them on YouTube. So you can see if you look for OptionVue Systems on YouTube, you can see that here was from yesterday, 2 days ago, 2 weeks ago, 3 weeks ago, a month ago. So we post a lot of content on trading and on using OptionVue. So if you ever look on YouTube, also each week Steve does a weekly show, The Prepared Mind, that we post late Sunday night for Monday morning, where he talks about the market ahead, what's coming up. So it's a very short 15-minute preparing for the trading week ahead. It's called The Prepared Mind. And Google+, Twitter, we're on all those. Here's a picture of our office building. All right. I'll go back to sharing this. So hopefully I'm back in. You can see my presentation. But thank you all for joining. And I appreciate you coming. And again, this will be recorded. It was recorded and will be posted on YouTube. Thanks very much. Bye-bye.